Breaking down the Calgary Row Home real estate market. Welcome to our Calgary Row Home real estate market review for March 2024. In this review, we focus on row homes sales throughout the entire city. Our analysis will include crucial market statistics such as the time to sell, the odds of selling, the buying pattern, and the sold price versus square feet, noting any emerging trends worth highlighting. Let's begin. Time to sell. The time to sell graph showcases properties sold over the previous 12 months with their days on the market and sold prices. Insights. Price range preference. The clustering of properties forming a triangle shape with a base ranging from $240,000 to $750,000 suggests market activity concentrated within this price range. Properties in this range are likely moving faster and possibly receiving more offers, reflecting a significant portion of the market's demand. Longer days on market for boundary-priced properties. The vertex of the triangle at 90 days, $480,000 suggests that as the price approaches the limits of the market range, properties tend to stay longer on the market. The triangle clustering also indicates a decrease in the number of properties sold as the days on market increase. Market velocity. With an average of 21 days on the market is relatively fast-moving for properties priced within the base of the triangle. This speed is indicative of a healthy demand in the market, where a significant portion of homes sell fairly quickly. The average sold price of $423,923 lies within the triangle base, further confirming this. Odds of selling. The odds of selling graph displays the number of listings across 4 categories for the previous 12-month period. The graph includes the number of properties in each category and shows the calculated odds of selling, monthly selling rate, and months of inventory. Insights. High market activity. An odds of selling at 84.92% is exceptionally high. The majority of listings end in a sale rather than being withdrawn, expired, or remaining active without a sale. This strong market favors the sellers. This environment typically leads to bidding wars and offers over the asking price. Rapid inventory turnover. At the current sales pace, it would take slightly more than half a month to sell through all the active inventory if no new listings were added. This indicates a hot market with strong demand and limited supply, reinforcing the seller's market conditions. Significant gap between sold and not sold. The difference between the number of sold properties compared to not sold and the relatively low number of active listings shows the strength of the market demand. The low active value compared to the high sales volume accentuates the competitiveness among buyers. Buying pattern. The buying pattern graph showcases the number of homes sold in each of the previous 12 months. The 6 months with the highest sales are highlighted in red, with the number of homes sold displayed at the top of each bar. Insights. Peak sales period in spring and summer. There is a strong seasonal trend in transactions, with the highest sales occurring from May through August, peaking in June. This matches the traditional peak buying season, when more buyers are active in the market, often driven by the desire to move during the warmer months and settle in before the new school year. The uptick starting in March and continuing through August suggests that buyers begin their search in early spring with transactions closing through into the summer. Strategic timing. For sellers, listing a property prior to this peak period could capitalize on the increasing buyer activity, leading to quicker sales and higher sale prices. For buyers, while the increased inventory offers more options, the heightened competition may require them to act quickly. Conversely, buyers looking for less competition might consider searching during the off-peak months. Sold price versus finished square feet scattergram. The sold price versus finished square feet scattergram graph highlights properties sold over the previous 3-month period. A trend line in red indicates the fair market value. To estimate a home's value, draw a vertical line up from the square footage to where it intersects the trend line. Insights. Positive correlation between size and sold price. The positive slope of the market trend line indicates a positive correlation between the finished square feet of a property and its sold price. This trend is a fundamental aspect of real estate valuation, where size, among other factors, significantly influences property value. Affordability challenge in smaller homes. the majority of properties in the 400 to 1,000 square foot range falling below the trend line indicates that smaller properties are selling for less than what would be expected based on the overall market trend. This could suggest a relative undervaluation or possibly highlight affordability challenges, where smaller, potentially more affordable homes are not appreciating at the same rate as larger homes. It may also reflect a market preference for larger homes. Consistency in property pricing. The properties in the 1,000 to 2,000 square foot range being fairly tightly clustered around the trend line suggests consistency in pricing for mid-sized homes, indicating that market expectations and actual sold prices are well aligned for this segment. We hope that you have found this review informative. Should you have any questions or would like to see real estate reviews for any other market or specific property types, please reach out to me via my website, byronhenry.com, my email, byronhenry@msn.com, or by phone 403-481-4831. Thank you.